Hello there, beautiful traders. Welcome back to our channel. My name is Desmond Samba, and I'm back with yet another episode of our Forex Weekly Outlook. Now, if you're new to this channel, if this is the first time going across already, first, you need to understand that this is a segment of my YouTube channel that I have dedicated to coming on here every single weekend with the best and juiciest trading opportunities across each and every financial instrument in the financial market. You're going to watch me break down the pairs one by one and then give you guys my own biases, and then let you guys know where I stand and then what I need to expect in the play. So sit tight and then make sure you watch this video all the way to the end because I like to keep the best for the last. So let's keep things up. The first pair on our list here is EurUsd. So now you guys know me, I like to do a top-down analysis. All right, that is, I like to go all the way from the top, okay, and then walk my way all the way to the bottom of this of this pair. That is, I go from the monthly time, but then I go all the way to the weekly and daily, and then eventually the 4 hour time frame. So to kick things off here on the weekly time frame, we do have our directional bias, which is bearish. The weekly looks bearish. This is like the consolidation, or what most people refer to as a range or a sideways movement. So this is the actual direction. However, if you go on the monthly, I think that would be a lot clearer. So if you go on the monthly, you see it a lot better and a lot clearer. That this is a huge, this is the market is south. Okay, it's headed south. It's just been falling for years. So once you get the directional bias, I mean, it's still down to the weekly time frame. Just to have like a better as perspective on the slope of things here. So let's see exactly what the market is saying at the higher time frame. Because at the end of the day, the higher time frame or the lower time frame, if you're trading, constantly trading the lower time frame, then you don't pay homage to the higher time frame. You're gonna get bumped on a regular basis. That's why I see day traders, most of them really lose a lot of money because they fail to scale higher. They're stuck in this range and they're wondering now what's going on, why is this pair going on, why is this pair not dropping, and then all they could have easily done was just simply zoom out, scale higher, to a different time frame, so you can see things from a broader view, so you know exactly what's happening and why it's happening. Right? So, like I said, we've gone for the monthly. We know the directional bias, which is actually very overall predominantly, and then we do have the weekly time frame confirming similar thing again. Then I'm not going to waste any much time going over top-down analysis again, because I did that in my previous video, so you can just check that out. So what do I think about EurUsd? That is just what matters at this moment. So I thought out EurUsd at this point, so one short actually with my daily time frame. So we went short on EurUsd somewhere around in here, and then took our profits here. And then I told you guys that this was a linear draw in the sense that if you look at the left shoulder, this is the actually let me just quickly again. So you guys can see this properly. So this is the head and shoulders pattern number one, and then we have head and shoulders pattern forming here as well. So this was head, shoulder, and then this was head, shoulder. So if you look at the weekly channel, which is the reason as to why I strongly recommend you guys, consult the higher time frame. So if you look here, we had the left shoulder and then we had the head. However, we did not really put in a right shoulder on the time frame. However, we did so on a 4 hour time frame, on a daily time frame. But you guys need to understand that after we have smaller pullbacks and we have the bigger pullbacks. So this was the smaller pullback that we traded, and it looks like off of it. Because I spotted some supply level here, and that supply level held actually. So just to make you guys see this clearly. So let's get on to the 4 hour time frame. This is my 4 hour time frame. Right? So this is exactly what it looks like on the 4 hour time frame. So I saw some supply level somewhere around here, and I took advantage of that. This was a flat pattern, line breakout, big test and a real short. So and then I said to you guys in a previous video that this is a supply level that if you scale down to if you scale up to the weekly time, you will see that the Fibonacci play was not there at all. In fact, if at all, this is the Fibonacci play that has played out here. Because this was the supply level that I was just watching out for, because I knew that listen, if market is gonna drop, it's not gonna drop in a linear format like this. So this is about it has to pull back and then continue. And once you have an impulsive move like this, market has to pull back to at least half of the entire stretch. So that was exactly what happened here. And I saw a lot of people took advantage of the, of the buy setup here, which wasn't wrong for me. I just don't like the idea of trading pullbacks. That is how I am. So long story short, we ran it all the way to the Fibonacci 0.618 region, and last week Friday was confirmed payroll. So so NFP numbers came out, and then I think that pushed this guy quickly into the supply level. So how do people take advantage of this? Easy peasy. See that a lot of people will be able to go long here. First of all, just so you know, so the early buyers will start out with big bearish and golden candle. The market comes back up. So this tends to happen, when the market wants to move. Anytime you see this thing happen where you have a level that has held in the past get stopped out like this, and then the market put back in, just know that they've stopped out a lot of early buyers, and then the market will go in the direction in an exponential manner, and they'll literally nothing to stop the market, like no resistance, no hindrance, just go straight to target, and that was a easy piece. It was too easy because they've stopped up a lot of early buyers, so they have enough liquidity, enough volume, and then they rally all the way up there. So long story short, supply level has been tapped into. All right, this was the supply level here. If you see, if you bring your Fibonacci from swing high to swing low, it doesn't even align at all. You miss the feed. However, if you extend it to this other load here, the swing high to swing low, you can see it is an imbalance, and it is actually at the supply level of the Fibonacci as well. So that's quite powerful. And it was a simple trade actually. Trend line breakout, a little inverse actions pattern from it here, and then trust me, those in my program community properly, even though I don't, like I said, I don't trade pullbacks, but because of them, and they made their money. So this was like the easiest trade, to be honest. So no time for too much explanation. However, if you're new to the trading business, find your way to my program community. The link is there in the description. Then find your way there, and then there's mentorship course for you that will take you from ground level all the way to expert professional level like we are on. And then it costs you $100 actually. All right, so this is the supply level here. So what is next for EurNzd? That's what matters right now. So we have actually fulfilled technical levels in terms of Fibonacci here for the weekly time frame. We have actually fulfilled technical levels. So we are still bearish on this guy because this is a continuation pattern to this entire top. This is headed to this pattern. This is not a reversal pattern. This is the continuation pattern. Actually, this is an intermediary because now this serves as a reversal pattern to be pullback here. This is reversing the entire uptrend. It looks like it wants to collapse. However, on the other hand, this is also a continuation pattern for the bearish drop on the euro. So where I think the euro is going to go to, well, I'm still bearish on the euro. However, we have to be careful now because so what I'm seeing on the dollar index, the dollar index is starting to be funny. So we also have to be careful ourselves. So you don't touch your account and then you don't touch yourself, and then you don't run out of capital when the market is finally ready to go in your direction. So one thing to note here is that we're falling back into this trend line here. We have broken back into this trend line here. So that was exactly where the market came to be tested. Okay, so it broke into this and then right. So right now, as long as actually, like I said, I'm too bearish on the euro dollar. No cap, no jokes, right? So just aside, I'm still actually very, very bearish. However, as long as the market remains inside of this trend and above this level, I have no business to indicate actually. I'll be waiting to see what the market does around this level here. Even if I don't see a candlestick pattern like what I saw here on at this level at the focus. So this was a reversal pattern here. Okay, so this was a reversal candlestick pattern where you have the position working, in position from the divergence working. Entry there, sort of support here, we have all people the downside. So even if it's something similar, or maybe a daily variation bottom candle, whatever thing, but I just don't see myself. I don't fancy the idea of taking a trade in here anymore. This is just looking messy to me. I rather have like a clear, clean direction. Like, let's come on here and break this level here, retest the level. I know that all leads to 1.055. So that's what I think. However, on the other hand, we must have contingency plans. So what happens if the market fails to return? What do we do? Okay, so in the event that the market chooses to do what the market chooses to do, which nobody knows actually, we will have to reanalyze that and then obviously start to target, the recent supply levels. So everything is marked out here. And the best part about my trading approach is that whatever the market chooses to do to make money, when it wants to go up, because the money wants to come back. The only time you don't get to make money is when the market stays at one place. So that's about so I'm actually I'm 70% still bearish on this guy. As long as we remain on that ABC yellow bar here, I'm still bearish on the euro dollar. However, in the event that we actually blew out of here, because you need to understand that this is a crossroad. We are at a crossroad. Remember the minor pullback and the bigger pullback. That is exactly what also happened there. Okay, that's what also happened here. So you need to also understand that this is a battle of Fibonacci. I call it the battle of Fibonacci, where you have one leading in the other direction, and then you have another one opposing that direction. So you have one Fibonacci from swing low to swing high, and the market has respected this point that is heading here. However, on the same hand, you also have something respecting swing high to swing low. So it's just a battle of Fibonacci. That's why I said I would rather wait and sit on my hands, because I like weights always. I don't want to have to guess. The market has to align to my system and my approach and give me meet each and every one of my execution criteria before I hop on a trade. That is exactly how you should trade. You should only react and not predict. So just react. So like I said, as long as this guy remains in this box between 1.09381 and 1.07343, I have no business trading this guy. To be honest, I like to wait and see what happens. We blow out of here, or we actually remain in here and break below. It's entirely up to the market. However, in the event that we break this little bar here, I'll be back here every single weekend to come and let you guys know what the market is about to do, so you don't get left behind. Okay, so whatever thing that the market chooses to do, once again, will make money because of the already effect. So that's about the euro dollar. So the next pair on my list now will be the pound sterling GBP USD. Or what most people choose to refer to as the cable, whatever thing you want to call it, just make sure that you're making money out of it. That's all that matters at the end of the day. So the cable has a similar structure to the euro dollar, and it's exactly the same thing. If you go from the weekly time frame, you will see that the market is playing around this level here, and that's why putting a head and left shoulder here is looking like it has chosen the other way around. So this is one of the most confusing, actually not confusing, indecisive pairs ever. This guy has stuck in this range since November 2023. So November, December, January, February, March. November, December, January, February, March. It took 5 months. So we've been in here for 5 months. However, from the look of things, it looks as if the market has picked a side. It's looking like that's picked a side. However, I'm not convinced. You see this weekly bullish engulfing kind that's engulfed with 1, with 2, with 3, with 4, with 5, with 6. Particularly this entire week of price action, this has engulfed it. However, still not impressed. I have to say clear daily or weekly kind of break above here. Pull back there, then I'll be interested in popular trade, because I need to see something that looks like this. I need to see this. I need to see something that looks like this. We need to rally beats into the highs of 1.31424. Then I scroll down to my daily time frame for what I'm going for buying opportunities. That is if this market chooses to reverse to the upside. However, like you've seen in my previous video and this particular video, I do have two levels that I'm watching out for here. So it's either we break below here or we break above here, whichever one that the market wants to do. I'll just take the trade nearest turning point. Nearest turning point being here, nearest turning point, where did the market get to and fail to break or continue. This is its turning point, turning point. Turning point, supply level, supply level. So once I say clear, let me just clear out the one side so you get a clearer picture of this. Right, so like I said, it's easy, and I like to trade with alerts. I set alerts because I'm not going to stop on my screen forever. Trading is also affording me freedom, so I shouldn't stop on the screen. So I use alerts, trading with alerts, so I also advise that you use that as well. So I want to see us clear this whole level here. Just clear this entire thing here. The rally into its highs, then come back for a pullback. Either you just whatever thing that you want to do. I just need to see this continue higher. So let me be convinced that we've spent at least 2 days out of here, 2 bullish engulfing candles out of here, out of this particular range here, and then we shall be good to go because I'll be here once again to let you guys know what's up, and you can see using my range breakout principle, the range breakout principle, can you see that even the total amount of pips accumulated between this bar 1 and bar 2 here, once it breaks out and once you measure it, you can see that it's exactly equal to the same pips from the upper range, or rather the resistance or the supply level to the next supply level, and the market loves to move from one level to the next level. So I'm watching this guy keenly. I'm actually very optimistic about this guy because I feel like we could actually have a trade here on our hands if this breakout is sustained. So we need to say sustained breakout of this point with at least 2 bullish engulfing daily candles. It will still down to 4 hours or 1 hour or whatever the case may be with you, and then wait for this guy to pull back, and then we hope for this guy and ride all the way to 1.31623. Now, in the event that doesn't happen, my bias remains the same. From the previous week's outlook. In the event that we fail to break above here, sustain and then pull back, and then the market decides to pull back here, we should see. Next thing that I have to see is that before we clear number 1, we clear this support level, we clear a second support level, and then we clear this trend line. That's when I'll be ready and eager to operate trade from GP USD and then make much of it. But in the event that doesn't happen, sorry, that doesn't happen, yeah, we should actually clear the upper range, upper bar or upper layer of this range, and then we should rally all the way to 1.31424. Sorry guys, I'm so tired. And I'm making this video at 1:10 a.m. That's what I'm so exhausted. So the next pair on my list now will be the next pair on my list will be Aussie dollar. So what happened? Let's just pick up from where we left AUD USD from our previous analysis. I said to you guys that this was looking like a head and shoulders pattern here for me on the Aussie dollar, because we did have the left shoulder here. Left shoulder here, right shoulder. And then also you need to understand that. So I also accuse this guy of being indecisive. I accuse this guy vehemently of being indecisive because now we have what seems to be like an inverse head and shoulders. We have the head, left shoulder, right shoulder. We have the head, right shoulder, left shoulder. Right shoulder, left shoulder. So this is one of the reasons as to why I urge you guys to look at the higher time frame. So you know exactly what you're trading, and you can identify a block or a barrier before you even get there. That is one of the key things about having this or applying this approach to your trading, is that you get to see potential blockage, potential resistance. You can see what's going on. Right? So this is once again the battle of Fibonacci. Battle of Fibonacci is how swing low to swing high, go back here, and continue. Then we do have a swing high to swing low, and then have this happening. So it's right now, as I speak to you, the point of contention here, the only thing standing in my way of going long on this pair is this bar here. In the event that we are actually able to break this bar here, okay, and retest, I will be going long on Aussie dollar easy peasy. In fact, I won't even look back. I will just pop on this on the show, and then I target the highs of 0.68710. But first of all, I need to see us clear this bar with maybe 2 or 1 day vision golden candle. Then I scroll down to my 4-hour time frame, just like this. Let me show you guys. So I'll scroll down to my 4-hour time frame. Already, this was a supply level, and the market has just reacted to it. I will not be surprised to see the market pull back deeper sometime next week. This guy drop lower here. So in the event that we do blood of this and the yellow bar here, we should actually see something like this. We should wait for something like this, wait for our retest and then continuation. First level target here, then second level target here. That is what I think about the Aussie dollar bullish momentum picking up. However, in the event that the bullish trend, dies off, I once again similar thing that I have on the pound sterling and EurUsd. I need to see us come and clear this level here, clear this trend line, clear this support bar. Then I'll be happy. In fact, I'll be a lot more happy to actually hop on a trade sell setup on the Aussie dollar. I'll be a lot more happy. Even though I hate this pair, it's one of the most indecisive pairs known to man, which is very, 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 very scattered. However, a clear break of this trend line here and this supply level, we should see Aussie dollar drop to 0.62702. However, in the event that we do actually stick to our bullish trend here, a break above 0.66662, we should see a sustained break above that level. We should see the Aussie dollar rallying to the highs of 0.6894. Right. So the otherwise it is popping up bounce. So the next pair on my list now would be NzdUsd. Now nothing much on NzdUsd, to be honest. Just something similar to all these guys. Okay, I'll just talk about it. So I highlighted this level in my previous video. I said, that this was the level that I was waiting for, and then the market came in and gave us what we actually needed to actually straightforward. So no games. However, now we have actually I was hoping that the market comes in here and stays below this supply level here. However, that didn't happen. So we move through that supply level. So right now, once again, the only thing holding me from executing a trade from this guy is this bar right here. If we are able to break up above this bar and then pull back, we should actually rally to the highs of 0.68117, which is this key level here. All right, so the market looks from one key level to the next key level. That's what we need to understand. Okay, so a clear and sustained break above this bar here, we should see the NZD dollar rally. NZD dollar rally all the way to 0.63694. However, in the event that we do follow through on past week's bearish weekly bias, we should actually see the Aussie dollar drop all the way to 0.57, all the way to 0.58057. All right. So what would be the criteria for execution? The condition for execution after that movement. So the first thing first is for us to clear this trend line here, come back and break below the trend line, then break below the support, then pull back, then I'll be listen, I want to short this pair. Let's just be frank. Let me be honest with you. I'm on the bearish side, to be honest, until this bar here gets broken, the bar above here gets destroyed. Once this is destroyed with a bullish important candle, I'm done with anything bearish about it there, and then I'll go for medium term, trades, bullish trade, and then if we eventually clear this blue bar, then we could be in for some major or serious carry reversal on the dollar as well as every other major pairs in the foundation market. So let's talk about the dollar index. So this guy is a guy causing all of this drama, all of this mess. This is the Aussie dollar in a nutshell. So So the overall direction of this guy is bullish. And then this is looking like a flag. So this is looking like a descending triangle. All right, descending triangle. And you guys know what happens at the end of the descending triangle. You tend to blow out, to the upside. So this is only looking like a counter trend line on the weekly time frame. So we could actually pop back up again and then rally on the up. So similar thing on the euro. Like I said earlier, we had a smaller pullback and we had a bigger pullback. So this is the back of Fibonacci as well across each and every major pair. So what you're seeing here is we had the first minor pullback, which was significant. We did not align with the Fibonacci. Now don't get me wrong, you can certainly make money off of the first pullback, but you see the second and the third one, those ones that are carrying a lot more juice. So you tend to make a lot more money. So this was the first pullback. We do not align with the tips. However, if you got the flip right now from swing high to swing low here on the second pullback, now this aligns perfectly with Fibonacci. And you guys know that this is A to A, B, C, D. Actually, it's four moves. Starts from the A, goes to B, comes to C, then finishes at B. So this pair, technically speaking, this move should end at we should see the dollar at 100.997, technically speaking. However, the one thing that you also need to understand is that we do have a break and retest happening on the bullish side of things. On a bullish side of things, so we do have head inverse shoulder inverse head of pattern forming here on the bullish side of things. So this is quite in the sense again. So the key thing for us there is to learn how to pick our battles. You need to learn how to pick your battles, because if the market is not presenting proper and obvious and juicy opportunities, we should have no business trading it. It has to be as obvious as possible. A child has to look at this pair and tell me that it's falling the price that's selling. That's how obvious I like to see myself sometimes. So that's just so what do I think about the euro, about the DXY actually? So it's like I said, this bar is a deciding point. If this bar fails to hold, which you see we had this head and pattern again. If this bar fails to hold, because this is also Fibonacci, right? So this was like a break and retest move. So if this bar fails to hold here, ladies and gentlemen, we should see that the dollar fall all the way back to 100.997, and in the event that also hold, we should see the dollar collapse all the way to 99.689, which was the July 2023 high, the lows rather. So that's that about the dollar index. Now for the best pair on our list here, which is let me see, is there any other thing that I would like to talk about? Any other pair? Let me just double check. BTC hit all-time highs. I broke it down in our previous video. Let me just talk about it again. So for the JPY index, I'm just going to talk about. So instead of going into the JPY pairs, I just talk about the JPY index and use this to pay it up with your analysis and then you know exactly where to stand and where the market stands at the moment. So we do have this is the JPY index. Sorry guys. So this is the JPY index here, and we are actually in a bearish trend as we speak. However, the market has hit a reversal point here where we've come to put something like a triple bottom or a double bottom of this whole thing. Yeah. So once again, the market doesn't move in a linear format. It has to, put in waves. You can see the wave here, you can see the wave here. So we need to go back into this. And then this is also this could also be a third touch of the trend line that could actually decide the fate of the web. All right, so this was first touch, second touch, so we could have a third touch somewhere around here, because this also lines up perfectly with Fibonacci. This also lines up perfectly with the views. So these are your case study for whatever, even if you're back testing or you want to take a trade, whatever thing it is. From swing high to swing low, you should see the JPY index rally into the areas of 0.0006985. Now, the JPY index is like the dollar index. Just use it to analyze the majors. So for the JPY index, use it to analyze the JPY pairs, the pairs that have JPY attached to, like USDJpy, like EurJpy, like CadJpy, NzdJpy, all these, all USDJpy, all these AUDJpy as well. So all these JPY pairs you can use this. So if this is going up here, the rest of the other pairs should be falling. And then when this is falling, the rest of the other pairs should be going up. So that is exactly how you use the index. It could be the dollar index. It could be the JPY index, like Japanese yen futures, right? So now have a juicy setup. Yeah, now I remember. I have a very juicy setup for you guys on USDCAD. If it goes and if it does, I'm gonna make a lot of money. So remember I had my bullish bias on JPY index. I had my own bullish bias. Yeah, I had my own bullish bias on this guy, provided that we clear this trend line coming from a significant time frame and a long time ago. So provided that so this was where my trend line came from, first touch, second touch. So this is also the third touch of this trend line. So I was like, okay, fine. I'm actually waiting to see what the market wants to do. What the market wants to do. If we can actually break above this trend line here, we should rally to the supply levels of 0.90958. However, in the event that doesn't happen, which it's not looking like it's going to happen from the look of things. So I was like, okay, fine. Let us come and clear this minor double top here. Let's just go above it. So I know that I have space all the way to the highs of 0.91123. But that didn't happen. Instead, we came to a double top, and this is a trend continuation chart pattern in this case, because the overall flow of the river on this guy is down south, it's bearish. However, if it's a top touch of the trend line, then we come to put a double top. So this is like a confirmation to start today. But I don't like to sell this. I like to trade like this. I like to see pullbacks. So already we have a daily candle breakout and close. As you can see, we've closed outside of this trend line here. So it's now exposing levels of levels like 0.85745. However, I like to see us because this is double top. This is a neckline. So we have to go back anyway to validate this entire broken the neckline. So let's come and retest it. So once we can retest it, then we should see USDCHF collapse all the way here, all the way here. Okay, so my first level target for the USDCHF, all things being equal, is 0.85800, and then my second target will be 0.84085. So that is about USDCHF. And how do you go about taking advantage of this? It's very simple. From swing high to swing low, let the market break below the trend line properly, let it clear this. Actually, you should have a little something to worry about this. So this will not make it look like a minor kind of split pattern. So let's just see what the market chooses to do around this level. So if you do have a nice bounce here, you should up on a trade from here to here and then from here. So that's exactly all about the USDCHF. I am 100% certain that this market is going to decide eventually. So let's say I'm 60%, I'm 70% bearish on this pair, and I'm 30% bullish on this pair, because I like to leave room for anything that can happen. When I just say anything to solve, you get. So I just like to leave room for whatever the market wants to surprise us with. So the last pair on my list now is gold. So we have seen gold do wonders. We have seen gold do wonders. Let's get rid of this. Yeah. So back then I highlighted gold. I said I wanted to see gold drop to the regions of like here of 1937. Okay, I thought that was gonna happen because of this. So, and we did not really have a nice Fibonacci pullback for this guy here. You see, so I was banking on us, hitting those big levels, maybe somewhere around here. I did not know that the market would actually choose to react to the open region, which it rarely ever does. So, long story short, we are broken out of gold range. As you can see, we are out of the range now. We have a bullish engulfing candle. And this candle has 20 more days to close. We have weekly bullish engulfing candle, we have a monthly candle that is direct and bullish and ready to go. So once again, how do we know our targets for this guy here? It's quite easy. Pull out your Fibonacci. Pull out of the fuse. So the first level that we should be targeting is 2408.121. All right, so let the market rally all this to the upside, or you can still around to your daily time frame and pick a side. All right, so if you come down to a daily time frame, which you're gonna first of all have like the first minor pullback there will be from this swing low to swing high here. So that will be the first minor pullback, and then to validate that weekly low that I told you guys about, weekly low, have to rally some more. All right, so we should have to rally some more to maybe this point right here or thereabouts. Okay, actually, other points. Oh yes, so this is the recent low, then this is the high. So we should see the market pull back at this point. Okay, all the way back to 2086 or 2083. Now, if you're a pullback trader, you can actually pop on this opportunity. For me, I'm not a pullback trader. I rather wait for the market to do whatever it was to do there. Come back here and knock on my door and tell me that's when I'm actually ready, trend all the way to the upside. So like I said earlier, from swing low to swing high, we have the high, we have the lows. We should wait for the market to pull back into the 2080 region, and then we should go long from there. Obviously targeting the recent highs here, and then whatever happens, the market can let us know. All right. So thank you so much for watching to the end of this video. Once again, my name is Desmond, and leave a like and comment, and let me know what you think and what other pens that you felt I missed out on. And then also, if you're new to this channel, simply go to the description of this video. You'll see a link that brings you straight to my Telegram community. Click on it, and then I'll be waiting, and then I'll be happy to see you guys, because I'm actually trying to grow our own Telegram community and then our social media family as well. So just do me a favor, find the link in the description that says ORNFX, and then find the link to my Telegram community to deal with me directly, and then also gain access to other profitable traders like myself. So thank you so much. Peace out, and I'll see you in the next episode. Bye.